Hello everyone, I'm Mike Stanis, Portfolio Manager with Johnson Investment Counsel, and I'd like to welcome you to the JIC Research Edge video. Today I'm joined by Joe Edelstein, our consumer analyst, who recently had an opportunity to attend Procter Gamble's Analyst Day. At Johnson, we know that Procter Gamble is very important to many of our clients as well as to the greater Cincinnati community. On a personal level, it's also very important to me because I spent over 17 years at P&G in various finance and brand management assignments. So Joe, after having an opportunity to attend Analyst Day and to interact with senior management at Procter Gamble, what are some of the priorities that they shared with us?
So management spoke to a number of different priorities that they have under their strategic plans, but really two things jumped out to me. The plan today is to go from 10 product categories down to 6 sector business units. Now clearly management is trying to instill a greater degree of entrepreneurial spirit under each of these units themselves, and really does allow each of the leaders to better manage towards their own revenue growth and profitability goals. And the second key priority is that P&G really does continue to focus on cost control. Management actually spoke very confidently during the presentation about the $10 billion in savings plan that they have outlined for fiscal 2017 through fiscal 2021. Now, obviously, under the new organizational structure, they will have the opportunity to potentially move headcount around to better align under each of the sector business unit goals going forward.
So Joe, how did the investment community react to those goals? What positives or negatives were shared with you?
So not only did I attend the Investor Day itself, but I did have a chance to meet with a number of Wall Street analysts as well as some former P&G leaders. Now, from all these meetings, there were a few takeaways here. First, I think there was very positive in that the company continues to focus on its largest markets. The US, for instance, had a great quarter last quarter, generating 4% growth. And I think focusing on that as well as other large markets that in total represent 80% of overall revenues and 90% of overall profits really should help keep management's eye on the ball going forward. And I should point out that management did reiterate its growth plans of outpacing the overall market, and so I think that will certainly help as they focus on these large markets. Also, P&G is looking to utilize smaller innovation teams to better fast-track some new products. Moving to a leaner structure like this certainly could help increase the speed to market and potentially increase the number of successful products. This will obviously be important as the company needs to pursue these growth goals that I just mentioned. And so with that said, there are still some remaining questions that I think the investment community still has. First of which is just who are the sector business unit leaders? I think this is really a comfort level thing where we still need some more background information. We need to get a better line of sight into how they plan to run their respective business units going forward. And not necessarily specific to P&G, just more broadly to other consumer product companies, even the broader staples sector for that matter. There are still a number of questions remaining around the competitive advantages that these companies have historically held around branding and scale. We certainly see a lot of disruption from new, smaller local competitors. There's competition around the use of data and analytics, and also changing business models, whether that means consumers continue to shop at brick and mortar stores or online, or even through new subscribe and save type models like we see with men's razors, which is really more of where companies are going direct to the consumer, really changes the overall channels that we need to think about as well.
So Joe, based upon your knowledge and analysis of Procter & Gamble, where do you think Nelson Peltz, the activist, has had the biggest impact to P&G since he joined the board?
So I do think we see it just with the new organizational changes that are being made. If you recall, Mr. Peltz had actually talked about moving towards 3 business units during the proxy fight a year ago. Now with the board changing and moving to 6 sector business units, I think we certainly see his plan coming together in essence.
Thanks, Joe, for the analysis and perspective today. It was very helpful. And thank you to everybody at home for the time you spent watching this video. If you have any questions, please feel free to contact your team at Johnson Investment Counsel. We really appreciate the opportunity to serve you and the trust that you place in us.